Back with closing trades looking robust, holding out well in the green, 18,300 plus now for the Nifty futures. A solid 188-point gain is what you're sitting on. Marico, that's the big mover from within the broader end of the market. Look at the move on that stock price, holding up 8% as we speak right now in the futures alone. Manappuram has made a comeback, 5.5% higher there. Laurus Labs, Metropolis. IndusInd Bank, of course, has made up for all of its Friday's losses. That as well holding higher by 5% as we speak. Kunal, since you track the Nifty Bank very, very carefully, just wanted to understand what you now foresee. Are banks going to lead the Nifty forward?
Yeah, I think they've been leading the charge from the front in the last 1 month. They could lead the charge from the front even going ahead. What I like about the move today for the banking stocks is that today we don't have... So on Friday when we fell on the back of sharp selling for HDFC Bank, IndusInd Bank and Federal Bank. Now today these stocks have hardly shown any major signs of recovery. They've not, of course, recovered even 50% of their losses which these stocks had shown on Friday. But then the Bank Nifty has recuperated more than 50% of that and has now come back towards that 43,300 odd mark for itself. This means that the Bank Nifty mixture is much more vibrant than what we would have traditionally believed. Today, the likes of ICICI Bank has made a good comeback, I think about 939, 940 odd mark. Then you have SBI, you have the other PSU banking stocks also made a very good comeback for themselves. So when you have such kind of a strong mix that even if one or two stocks, large cap, mid cap names could get into a bit of a corrective phase, there are other stocks which can contribute and take the balance for the banking index. That's a sign of strength and robustness, and that I believe could probably lead to the banking stocks going up higher.
Okay, so that was the take coming in on the banking stocks, but let's talk about some earnings. UPL was a bit of a disappointment as it managed to miss the street estimates not only on the top line, but the EBITDA margin slipped to 16.4% versus 21.1% earlier, and as a result of that, the net profit declined by 27% on a sequential basis. Let's try and understand it better with the management as to what went wrong and what's going to be the outlook going forward. Mike Frank, the CEO at Global Crop, UPL Global Crop Protection, joins us on the show now. Mike, hi, thank you so much for joining us. Well, Q4 was impacted partly on account of the oversupply that we had seen in certain molecules. Going forward, do you expect the pressure to continue for the next 3 to 6 months?
Yeah, so when you look at our overall year results, we're very pleased with how we performed this year. As you can see from our results, we grew the top line 16%. EBITDA growth was 10% overall, and of course, as you said, that was impacted by the fourth quarter performance. We did see in the fourth quarter like a couple of impacts. Firstly, within our post-patent segment, the prices coming out of China post-COVID, as they ramped up production, the prices started coming down, and so that really put distribution in a wait and watch mode as they watched the prices decline. And so we competed aggressively in that marketplace, and I would say globally throughout the world, with the exception of North America, we saw nice growth even in fourth quarter. Fourth quarter, though, in North America, partly because of the post-patent situation, and also with a delayed spring, there was very little product that moved onto the ground, and so that did impact the timing of our sales. Now, as we look forward into our next year, we would anticipate that the current pricing pressure that we're seeing within the post-patent segment, that's going to persist at least for the first half of the year. That being said, we're well positioned to compete. Some of the actions that we took in the fourth quarter, we really managed our working capital and our inventories, and so we slowed production and we ended the year with overall reduced inventory, which will set us up to compete very aggressively into this next season.
What about your FY24 guidance? Sales 4 to 6%, 4 to 8%, EBITDA 6 to 10%. What growth triggers are you expecting in the company to achieve this?
Yeah, so as we look at FY24, as you said, we've guided up at the midpoint to be up in revenue about 6% and double digits in EBITDA. Again, we would anticipate, if we look across our portfolio, that the global crop protection business will continue to see some headwinds as a result in the post-patent segment. But that being said, as we transition more and more of our portfolio to differentiated and sustainable products, that segment of our portfolio, which is about a third of our portfolio, will perform very well, we would anticipate, going into this next season. Our seed business has performed well throughout last year and is set up for another good year in FY24, as is our specialty chemical business. And so that's just overall, we expect growth in every one of our platforms. Again, We're really excited about some of the new products that we launched last year within our crop protection business. It generated about $140 million of new product revenue in our new launches last year. So those products will continue to spool up this next year. And in addition to that, we have another approximately $120 million of new revenue that we would expect in FY24 coming from our new product portfolio.
Reduce the net debt by $440 million to about $2.6 billion. What would be the debt reduction strategy forward?
Yeah, one of the commitments we made this year was to reduce debt, and we're very pleased. We reduced overall gross debt by over $600 million and net debt reductions of $440 million. We were able to do that really based on the strong operating profits in each one of our operating units. We would expect another good year of cash generation coming into this next season. We're not going to make commitments at this point in time in terms of further debt reduction. Obviously, we'll look at all the opportunities in terms of how best to use the excess cash, and throughout the year we'll make decisions on whether that goes into debt reduction or other investments that we could look at throughout the year.
Right. You know, also China opening up increases the availability for generic agrochemical solutions. What synergies and what revenue potential then can be expected from this?
Yeah, so we do operate in China. We have a good business there. I think we have a lot of potential. So we are looking at opportunities to expand our product portfolio, not just post-patent products, but also some of our differentiated and sustainable products, also bringing them into the Chinese market. Again, from a global standpoint, our manufacturing base is primarily here in India, which gives us a great competitive advantage. Our plan in FY24 is to run our plants to maximize the volume coming out of our plants, competing very aggressively in the post-patent segment, and that'll set us up well to compete in FY24.
Okay,
Right. So what kind of impact on UPL's business might there be because of El Nino?
Yeah, so our business is very globally diversified. We really do business almost in every market where there's agriculture, and so every year there's going to be some impact to weather. Again, with La Nina, we would expect some wetness again in markets like here, which could have some impact. But overall, when we look at year-over-year basis, last year our business was impacted in Argentina because of the drought. The U.S. and Europe also had very hot and dry conditions in some of the markets that had impacted us. So as those markets normalize, we would actually expect some opportunity as we look ahead to the next year, just from an overall weather perspective.
I'm glad you could join us. Anshul, I'll pick it up from where Mike left. There is one sector which constantly disappoints, whether it is hot weather, cold weather, too much of rain, or global problem. It's the agrarian sector, whether it is UPL or Rallis or Tata Chemicals. This is one sector which had a lot of promise, but the promise somehow just does not get completed into a delivery. Even a stock like Advanta has struggled, Syngenta has struggled, Coromandel fertilizer of the breed, that also has suffered.
Nikun, this sector has many parts. One is, of course, the agrochemicals that you alluded to. Then there are, food-related sectors, sectors which benefit from food prices going up. For instance, sugar, and then there are users of agri commodities where agri prices being up hurt those sectors, for instance, FMCG. Now, in agrochem, there are many moving parts. If rains are scanty, you have volume pressures. If raw material prices go up, you have margin pressures. Everything has to fall in place for this space to actually show expanding ROEs. And as we all know, it is really that which leads to valuation uptake. Unless that happens, will see cyclical moves and then reversion to the mean, which is what we have seen in recent times. You and I have spoken about agri producers in the past, particularly sugar. I think that space is very sweetly poised, and both on account of pricing having upward pressure, as also the structure of the industry having improved because of the ethanol policy. We believe that this space is very attractively poised for times to come. Then, of course, the agri consumers. There again, if there are, for instance, we've seen wheat prices come off of late from highs. We've also seen cotton prices come off of highs. Now, sectors which benefit from this will obviously be good to be considered for portfolios as we speak today. Now, that is the way I would look at it, not put this in one bucket, but split it into various buckets and see which bucket suits you at a given point in time for an investment.
Right, Anshul, great to have you on the show, and next time, hope to see you in green. On that note, we're going to take a very quick break. Come right back. We'll track the last half an hour of trade this afternoon.
Yes, okay, for
1,250. So we're off the highest point of the trading session, but not by a whole lot. Bank Nifty continues to be higher by around 600 points. In stock-specific action, in the last few minutes, there has been a perk up for the likes of Triveni Turbine. GE T&D is higher, and Delivery is one stock as well, which is inching higher. Marico has been strong since the start of the trading session and continues to be higher by around 8%. Let's welcome on board Deepak Chopra as well to talk to us about what's looking good in the market. Deepak, before we talk about stock-specific action, we were discussing about ONGC, and I understand you ordered from it recently. What was your experience like?
Yeah, it was something interesting, Anisha. I tried just today to see how it works. So I think there are two applications here that I think PhonePe and Paytm allow you to access the ONDC network for food deliveries. And I ordered from a local restaurant. The prices are lower. Of course, nowadays you need a math PhD to be able to figure out what the eventual price will be, because there's a price that is displayed to you, then there's a discount, then there's a coupon, then there is some card level offer and all that stuff. So, but net it was still cheaper. So, and the delivery came in, it just came in a little late. There was some discussion with the restaurant. So early days, I think even when I started off with the early days of Swiggy delivery, Zomato came into delivery a little bit later. So even then there were such teething level problems. So it's interesting to see the rival network starting to come in, and I'm very interested in how the economics works also. Of course, Zomato is a listed player, so it will directly affect them as well.
Does that mean for our viewers, don't buy Zomato because ONDC is around the corner?
I don't know about that. I think Zomato does have. To be honest, today even the order fulfillment part of it was actually handled by Zomato. So I got a call from Zomato saying the restaurant wants to talk to you. They connected me to the restaurant. So somehow they might actually be part of this ecosystem rather than just competing with it. And they obviously have a lot of the people signed on from the delivery ecosystem to the restaurant ecosystem. So I think parts of it will be their friend, and parts of it will probably be their enemy. But I wouldn't say, I think it's way too early to take a call on whether it will affect their business. Of course, it's a challenge, it's a threat. I'm sure they've seen other threats like this before, and you will see if this competition changes their path to profitability. I think Blinkit is a bigger problem for Zomato compared to what ONDC will do on the food side of the business. I think the 10-minute delivery is I don't think it's a greatly successful model for India right now, especially.
Sir Rudramurthy, I'll go back to that very basic question. When do you think Nifty will make a new high? Do you think it's a matter of time, days, not weeks? It's a matter of days now?
Yeah, yes, Nikunj, I won't be surprised if we can see that in this month expiry itself. So May month might be the time where we see Nifty moving to all-time high. And there are some more shorts left in the system. And even last week before Fed meet, few people have even attempted their shorts. So now for me, these shorts will have to run for cover as we go beyond 18,320, 330 zone on Nifty future. And similarly, we are now seeing even Bank Nifty outperforming Nifty, which suggests to me that Nifty will hit that all-time high soon. And even the same with Bank Nifty also, Reliance is also giving the needed support which is there. And also we can now see even support from other stocks like ICICI Bank, Kotak Bank, which are all performing. And even if you see mid and small cap stocks or even higher mid cap ones, something like DLF, even stocks like, let us say, PFC, REC, and even if I see some more F&O stocks which are like from pharma, especially mid cap pharmas like Granule, Laurus Lab, these are all stocks which are doing fabulous. So it is a matter of just if, and the Nifty and Bank Nifty will hit that all-time highs very soon. But I feel a lot of stock-specific moves and these mid-cap pharma stocks specifically, and some of the very stock-specific calls like DLF, these stocks can also do very, very good from current level.
Deepak, what has changed? For 1400 points on the Nifty, $2.5 billion of FI flows. Suddenly everybody is talking about a new high. 3-4 weeks ago, we were talking about a new low being made in the market. Everybody was worried about valuations at 16,800, but 18,200. The same folks are saying, don't look back, look forward, and India is looking cheap.
Well, I think the realization, Nikunj, is that certain things have started to change. The US is, India, of course, in April, first week, RBI said it's not going to hike rates. So it's taken a stand that it's done enough. The US has signaled that it's done enough. It's only recently that it changed its view. There has also been the banking crisis in the US caused not by bad lending, but by mark-to-market losses on bonds bought from of government bonds portfolio. So I think when you have three large banks, three out of the 5 largest bank failures have occurred in the last 3 months. If you look at the stock markets, even in the US, you would not think that was the case. The second largest Swiss bank failed. If you look at the Swiss stock market index, you wouldn't think that's the case. I think worldwide there is a feeling that this entire last 1.5 years of crisis is coming slowly towards some kind of an end, that the governments of the day will, the central banks of the day will not increase rates dramatically from here, and perhaps even start to cut rates, especially in the US later this year, perhaps, or in India sometime in the next year. I feel here there's a feeling here that India's, and by the way, the earnings that have come out, they're quite spectacular. We're talking 15% median earnings growth for the Nifty companies that have already announced results. I didn't count results of today. Very high operating margins of almost all the companies that have come in. Even the Nifty 500 is a little bit of 15% on median on whatever has been announced, and I think about 25 or roughly 25 to 26% of companies have announced earnings so far. So the earnings trajectory seems to be back in place. There's been a little bit of margin compression in some sectors, but by and large, we haven't seen that impact too much in terms of growth. Fundamentally, things seem to be turning around. If the interest rates start to fall and the government bond yield has fallen from 7.5 to 7, if they even start to correct for companies, I think margin profiles will look better going forward. So I think all these factors put in have given some kind of a positive sentiment. But let's put it this way: markets have been benign for 1.5 years. You've got 1.5 years of earnings growth without 1.5 years of stock market returns. So some kind of return to normalcy will happen at some point. Maybe we're only seeing that, and I hope it continues. There's a long way to go from here, but it's encouraging to see both fundamentals starting to work out and some flow starting to come back to India.
Okay, big one tomorrow, Mankind Pharma, and there's been all sort of number that's been doing the rounds in the grey market premium, which is already going at. Let me take it across to Srishti, find out all about this one.
Well, yes, all eyes is on Mankind Pharma listing, and this time around the analysts are expecting for a positive listing given the fact the strong response that this particular IPO got in the large cap space. This is an IPO coming after a long period of time in the pharma space, and this time around we have seen a good response coming in with a total subscription of over 15 times, wherein the QIB portion was subscribed with the most of the enthusiasm with 949 times. subscription for that particular quota. Other than that, the NII portion was subscribed almost 4 times, while the retail portion was subscribed 0.92 times. But nevertheless, the anchor investment was actually quite robust at 1298 crores being raised through the anchor investments from the likes of HDFC Mutual Fund, SBI Mutual Fund, Axis Mutual Fund. All of these companies have invested in this particular IPO, and some of the MNC names as well, like BlackRock, Nomura, as well Morgan Stanley into the list. So this particular IPO is expected to get a good response, wherein analysts are expecting that the listing could be at a premium of rupees 100 from the upper band of the price range, which is 1080, but they are expecting the listing to be around 1200 rupees. So all eyes on Mankind Pharma, but do remember that majority of the analysts have recommended for a buy in this particular IPO, which indeed got a good response. But looking at the valuations, because Nifty Pharma trading around 23 times, the Mankind Pharma IPO at the upper band is being valued at 29 times. So if this particular IPO listing is done at even almost a 10% premium, then the valuations can be stretched till 30 odd times. So that is all about Mankind Pharma. All eyes on that particular IPO listing tomorrow.
Shrishti, for putting that into perspective. Before we get the BTSC trades from a chart, Deepak, have you looked at Mankind Pharma? Any recommendation there?
We don't have a view right now. We haven't analyzed this too much. Big IPO, it's 40,000 crore plus. So let's see how it lists. We would rather buy them after maybe a result or two after the IPO. So waiting for some of that.
Okay, so waiting patiently to see how the stock reacts after it lists as well. But let's get the BTSC trades out of the way. Rudramurthy, what are the BTSC trades you have for us?
I have a buy call on PFC, and Power Finance Corporation, having made that big move from 120 level, is now consolidating, and it is just getting ready for a next big move. For just BTST, look at target of 180, positionally even 200, 220 is possible. Have a stop loss of 167 for this buy call. I have a second buy call on REC. Again, this stock very similar to PFC is making that big move, consolidation, and again moving on the upside. REC very short term BTST, look at 140 as an initial target. Have a stop loss of 132 for this call.
I want to go back to Indian Hotels. It's made a new lifetime high. It's just one of those stocks where 3 years ago they were on brink of actually getting extinguished. From survival to revival to flourish, and that is the real flourish which has happened in the hospitality business. And I've been told that even globally also, whether it is Tokyo, whether it is Istanbul, whether it is New York, or whether it is London, globally hotel prices have gone up anywhere between 30 to 50% in the last 2 years. That's largely because of Airbnb. Nobody created hard assets. When demand is coming back, everybody's surprised, because when you're traveling, you need more than just a homestay. You also need experience, you need service, you need good food, and you need good experience. And all that, I think, you don't get when you are taking the Airbnb service. And Deepak, I look down and I say, okay, a 70 rupee stock, which is Indian Hotels, has gone to 350. It's a 5x from the low. But Milind Karmarkar of Dalal and Brocha told me that a similar thing has happened in 2003 and 2008. When the consumption boom unveiled, Indian Hotel went up by 15 times.
Well, I hope it happens, but I don't think so. I mean, I think it's reached close to where it should be. I was just in Indian Hotels, the Taj property in Goa. They are full up, and it's even in what is supposed to be lean season, prices are relatively high because they seem to be fully occupied. So things may be changing on the consumption front. They're still at a 50 times earnings. They still have about, I think, 3,000 crores in debt. They've managed to reduce debt this year. They took a lot of debt on during COVID because cash flows weren't sufficient at the time, but they're not looking really good. I think, the problem with the hotel business is it's cyclical. This is the up part of the cycle. I don't know how long more it will survive, but it generally is followed by a long-ish flattening cycle because more investments will come into this area. And I think many of the hotels have already announced it, but not enough so far. I feel a lot more will come. But again, you have to track this as one of those premium hotel properties where demand isn't very focused so much on price. So to some extent, I think the price jump to the 300 levels is very justified with their financials. But beyond that, I think it's getting into frothy territory, and they've shown great performance, no doubt. But I have been an investor. I got out very recently. I hope they continue their performance, and I'd be happy to buy them back even at a higher price from today if they continue to show this kind of performance.
Okay, let's get the BDSC trade in the meantime from Kunal as well. Kunal, what are you strategizing?
So two buy calls. L&T Finance is one of the stocks which is confirmed a breakout of triple top formation for itself. So that could be a classic breakout on the upside. L&T Finance is a buy, targets of 110, stop loss at 94. And the second would be a buy on InfoEdge Naukri. That stock has also confirmed an inverted head and shoulder breakout above the 3900 mark. So what's the rest a buy? Targets of 4300, stop loss at 3840.
Right, okay, let's begin winding up for the day, and good to see that 18,300 print on the ticker. Deepak, we'll let you go.